Hello guys, welcome back to the YouTube channel where we will go through Twitter. It's been a while. I say that every time because yeah, there's no excuse really. There's no excuse. So we'll go through some charts from the people that I follow on Twitter and that I think brings me value from time to time. And yeah, let's see what they have to say. As always, guys, if you want to like and subscribe, all that good stuff to the YouTube, to the Twitter if you are on Twitter, or X as it is called now, but also Substack. You know, that's my main platform, you can say, with when it comes to videos, daily updates all the time, more or less. So Twitter, the beloved Twitter. I really like Twitter. Ever since Musk took over, it's just a better place in my opinion. You can agree or you can disagree, but that's my opinion. As you can see here, we have Tavi Costa. This is from September the 2nd, so we're like 5 days, ahead of this one here. But again, still worth noting here that wouldn't it be interesting if inflation bottoms out? Yeah, I agree. We have if you overlay the inflation development in the 70s, we are potentially bottoming out here. But the Fed still has to cut rates to elevate the government's debt burden. Two words come to mind: hard assets. Yes, that's gold. Yes, that is silver, platinum. But for now, I wanna say that just like I will not take credit for it. This has to go to Francis Hunt. This is right now, gold is king. Right now, gold is king. You need gold now. We had the big breakdown in gold, the gold to silver ratio. The retest didn't confirm. We went back into the range, and now we're actually potentially breaking out to the upside, meaning gold will be king until we start to see the collapse again. There will be a time for silver when it starts to do what silver does very rarely, and that is spiking. But when it does, it takes no prisoners. But yeah, I think inflation is bottoming out here for like a year or two, and then we go higher. Sahara here with oil dropped. Yes, this is a big one here. Dropped through my red box and the lower band of the coil. You can see the coil here. That's the coil. That's also one we looked at. It was, again, everyone with some basic knowledge to the technical analysis. Again, not saying that Sahara is basic, he's really good, but again, you could see the squeeze coming in and the high volatility with an expansion. He's saying here that have adjusted the bowl, though it may want to put in a spike low. Failure to turn from here will target the prior low. So he has a target that is down here, the A, I would assume, at roughly 60 something. And that's also my target, by the way, roughly 60 here, because you have a long-term trend line coming in here, and that would be a target. However, what he's suggesting is that we have this bowl here, very clean on the left side. You can see it here, very clean. And then no touches at the bottom, and then we are potentially, again, if we had a touch here, that would be perfect. I would be much more like, very interesting. But again, let's see how it goes. And so if that is the case, that's also, if we go back to the post from Tavi, right? If we start to see oil coming up higher, because oil is one of the bigger component to inflation. So if we come down here and start to grind higher, we shall see, inflation coming, going up over the next few years here, if that is the case. So Sahara, dollar trader here, again, a lot of text, pretty cool. Also WTI here, it appears to be at a pivotal point, showing signs of indecision. A little bit of different view here, like a channel, and then we kind of pierced, and then we came back into like a doji here on the weekly. So yeah, indecision here. I do think though that we are going to see a retest, and then that's where it all happens or will be decided. I still think the highest likelihood is potential retest rollover. That is my opinion. JC Parrots here. How long will this be resistance? A month, quarters, or years? So we're talking technology versus the SP 500. This goes back to the .com bubble. We're basically here again. So great little ratio here that again, very interesting moment in time there for the technology divided by the SP 500. I saw this video here again about the yield curve inversion, the history, what happened, what could potentially happen. I really liked it. You should definitely watch it. It's very well made. It's very simple, but yet again, you know, very detailed. I like it. Really cool. You will learn a lot, in my opinion. Gold broker. So we're talking the Dow to gold ratio. Big ratio you must look at on a weekly basis. Well, not on a weekly basis, but you need to know that it is there, and you need to check into it every once in a while. And this is once in a while for sure. Breakdown suggesting very big moves ahead for gold. And why is that important? Because when you have gold or any asset outperforming the main index, you can say the Dow Jones, that means more money is flowing into that asset, in this case gold. So we are breaking down, retesting in a small rising wedge here, breaking down. That looks really bearish. One note, you have some support here. You can see you have this little channel here. If you connect the upper highs here and the lows here, you have a little channel. So I'm not fully convinced, but this is definitely a start. And if we get below, I can't see the exact number, but let's call it 16, 15, 16-ish. I think we are below the lows here, and then game on gold. Game on gold, that's for sure. That's yet another check mark, which, by the way, I think is the last check mark, because gold has broken out versus inflation, versus M2 money supply, versus the Dixie, versus, I could go on. I have a list that I go through, you know, on a weekly basis, roughly. By the way, back in the .com bubble here, spike, bear flag, game over. So this, you know, typically, you know, have a huge spike rally, blow off top, whatever, and then you bear flag, and then you break down, game over for a very, very, very long time. Stefano here with a this is a stock. Usually he posts a lot more ratios, ETFs, long-term stuff, but this is a Silver Corp metals, and a very textbook, very clean downtrend, sideways action. You can see the double-headed inverted head and shoulders here, left head, right shoulder. So if we start to break here, again, you can measure the move, but again, we are probably not tomorrow going to the highs again here. Very clean, clean chart. Again, I don't know what the indicator is down here, but we are definitely in a zone where you are in a bullish, you know, alignment. That's my takeaway anyway. So nice chart there. Patrick, my good friend Patrick. Increased odds of fast moves upwards for gold happens once it breaks out versus silver, like we just looked at. So you can see here again, gold breaks out versus the SPX, and then you can see when it breaks out, you get the bigger moves, and we are breaking out probably right now when we speak here. So pretty cool little chart there by Patrick. Well, Patrick, once again, are you watching this one? Silver, yearly, remember yearly time frame. So again here, I think Patrick's main time frame is I think it's the 3 month, if I remember correctly. I think he really likes the 3 months, but this is the yearly. This was the yearly close in the 80s, and we're basically trying to get back above again. Zoomed in here, you can see we have broken out. Can we hold it? I will also add to his analysis here that again we have the highs here, which is also of significant at roughly, let's call it, it's roughly at 30. So that's also one minor goal to get above. But again, silver again is looking, even though it's very volatile, I have high hopes, and with quite confidence that silver will do really, really well over the next few years. Kevin here from North Star, SPX versus gold, same again, but you can see we're breaking down here, and yeah, exciting times if that is really the case here. For now, it has broken down. This is the monthly. You can even see the breakdown here, the retest, you know, intra-month, and then we're rolling over now. Exciting moments, exciting moments. Again, here we're just with, if I were to put the other side of the coin here, we're still making You can see here like a rounding here, but it's starting to get a little bit heavy on the right side, in favor of gold. And that's good. We like gold. Rush out here. Gold has been trading within a narrow range for the past 18 weeks. This is the range here, between 2,470 and 2,530. That's actually a quite narrow range to hold. Given that for the second consecutive Friday, gold failed to break out, I would expect that gold needs to decline a little further, this time perhaps towards the 2,450 level. Again, I also want to show you that, you know, the rejection this time around is quite harder compared to the others. We are getting rejected, but this one is there's a lot of short-term momentum to the downside, that is for sure. And we were already almost breaking out on the non-farm payroll news or data coming out this Friday. We tagged it, and then together with the entire market, basically, we're talking NASDAQ, crypto, everything more or less. Bonds increased, yeah, but rates went down. Yeah, it was a bloodbath. Everything came down hard. So again here, same thing. You can see here his expectations is this time around he has a drawing on here that we're getting to the low side, potentially undercut, and then get back in and rally higher. We shall see. We shall definitely see. In my opinion, I would align a trend line from that one here to here, and then we connect the lows here, and that's also connecting with his low over here at roughly 2,460-ish. So Kevin again here, the yield curve. There has been a lot of charts talk about the yield curve. Also, getting back to the video that I just mentioned, watch it. We are breaking out here today, or this week, I should say, on the yield curve re-inversion. We had inversion for 2 years, the longest inversion of the yield curve ever seen, at least going back from the charts that I have, if I remember correctly. Also, the depth of it is absolutely insane, incredible, depending on how you want to frame it. And typically, always, when we see the on-inversion, then there is a time ticking, tick-tock, before we hit recession. And if the length and the duration and the depth, if that is an indicator of how the recession will be, you buckle up. That will be a big one, and nothing will be spared. There will be, especially the high-risk assets. You're talking NASDAQ, yes, crypto, the SPX, gold and silver will also initially get hit. I mean, again, the timing of it difficult, but again, just the clock is ticking, in my opinion. Last but not least, here we have Axel. Yields, this is the T-note, the 10-year, from the Global Equity Markets report. That's his report, reversal taking place. So you have a very beautiful trend line coming down here, left shoulder, right shoulder. It's a bit skewed, but it is there. Right shoulder here, head there, and also some internally smaller time frame reversals breaking out. And you're seeing rates coming down. Again, the T-note goes up here, and rates are coming down. So cool. That is all, guys, that I have for you. Again, as I say every time, if you are on X or Twitter, follow these people. They are really great at what they do with different techniques. So yeah, have a great weekend, guys. It's been a pleasure to do these videos. Again, please like and subscribe. Highly appreciate it. Have a great day, guys. Cheers. Bye.